podcast. I'm here with Julian Koh, the co-founder of Ribbon Finance, a DOV protocol. Julian, how are you?
Good. Thanks for having me. We were supposed to do this like a year ago, but I think I've just been prolonging it. So finally happy to be on the show.
Absolutely. I'm really stoked to have you on. I mean, we've talked on Telegram, but this is the first time seeing each other virtually, so that's great. So,
Yep.
Julian, I was thinking maybe we could just start off about sort of your background. You went to university at Cornell. Um, what did you study there? Did you study computer science or finance or econ?
Yeah. So as you mentioned, I went to Cornell. I think back then I was sort of majoring in computer science. I was definitely just more on like the engineering sort of path. So I sort of got into crypto a little bit before college, and it was like a bit lucky that I chose Cornell as my school because once I sort of started my freshman year there, I sort of stumbled upon like a very big crypto group there, which now I mean some of them are like the founders of like Avalanche, like Tezos, Balaji, whoever knows now, he was also there. A bunch of like the MEV research all sort of came from Cornell. So yeah, I think it was very lucky that I just got into crypto. I was just gonna sort of study engineering, computer science, but I met all these like crypto people there as well.
That's cool. So, were you guys part of like a finance club or something like that, or a crypto club while you were in school?
Yeah, I was part of like a Cornell like blockchain club, but I mean, back then in like 2018, 2017, there wasn't really much like DeFi per se. So I wouldn't say finance and crypto had a big overlap. I think maybe there were some people who were interested in, I don't know, like trading crypto, but less so of like the academic, the finance academia of that you see now in DeFi. So yeah, I think back then it's mostly like computer science folks, more interested in stuff like consensus algorithms and more basic protocol level stuff.
Yeah, that makes a lot of sense. So, you're in the blockchain club. So, do you know for sure, like, once I graduate, I'm going straight into of the crypto space? Is that kind of, was that the goal, or were you kind of, did you just kind of fall into it when you were applying to a lot of places?
Yeah, so when I did my high school, we had like an 8 year, 8 month gap before I went to college. So that's sort of where I got into crypto. So this was like late 2015, early 2016, first learning about crypto. And after I did my freshman year, sort of crypto went crazy in 2017, as everyone knows. So I definitely felt a bit of FOMO. So I did take a year off to like intern at a few different places, to really like work in the industry. And then I came back for another year, and then I felt FOMO again, so I left again. So I officially only spent like 2 years in university, but yeah, I think it was pretty clear that I wanted to do crypto full time. I just needed to figure out which direction or where I would start. But yeah, that's sort of I'm sort of like a career crypto person at this point.
Yeah, that's pretty amazing. So, you almost went like the Bill Gates route where you like just leave college early and go straight to work. Is that right?
I would say that's right, but I wouldn't want to compare myself
Yeah,
to Bill Gates. I'm nowhere as successful as him.
sure, sure. So, one of the places you were at was Numerai. Is that right?
Yeah, so that was like my first crypto gig ever. Back then, I mean, they were doing quite interesting stuff in quant finance, and also they had some interesting crypto related stuff. So, for some context, how their business works is they run a hedge fund, and it is like a purely quant hedge fund. And they also have this crypto system where data scientists can submit models of what they think the market is going to do, and they can sort of stake a cryptocurrency against their model as like some form of skin in the game to signal I have high conviction in my model. I think it's going to do well. You should like use my model. So Numerai, the company, sort of aggregates all these models and uses this staking signal to figure out, okay, which ones are legit, which ones are trash. Um, but yeah, while I was there, I think I was definitely much more on the crypto side of things, less so on like the actual quant finance stuff. And yeah, I did all sorts of random crypto stuff there. I think it was my first like real crypto engineering job.
Yeah. Oh, that's fascinating. One more quick question on Numerai, because I just want to understand this right. So let's say I'm a quant, I figure out some strategy, I signal with a big token stake that this is a good
Yep.
strategy. So if the Numerai hedge fund uses my strategy to trade it, is there like a revenue split or something? Is that how it works?
Yeah, so that's they have like a fixed payout every week or every month. It's been a while since I've been following the project, but they used to have like a fixed payout every week or every cycle, and they'll sort of divvy that up using live data on how your model has performed over the last month. So, for example, if the company decides to pay out $100,000 over a month, um, over that 1 month of live data, they'll sort of figure out which models perform the best and divvy up that pot between those people. So that's how it works. And they also have this they also used to have. I mean, the interesting thing about this staking system is like it filters out a lot of the civil attacks. So, for example, you can think about it as like the easiest way to game that system is for me to submit a million models. Like one of them will hit and I'll get paid out, right? So having this like economic stake um, to sort of signal some sort of conviction is very important. Otherwise, you just end up with a bunch of spam and you won't be able to use rich models. So yeah, that's sort of how it used to work. I'm sure a lot of stuff has changed now, but it was a very interesting idea.
Whoa, that's pretty interesting. So then, after Numerai, where do you find yourself next in between co-founding Ribbon and leaving Numerai?
Yeah, so I was just like an intern at Numerai, and I think after those 6 months, we were in like the absolute bottom of the crypto bear market. ETH was at like $80. I was just figuring out what I wanted to do in the crypto space, but I wasn't really sure. So I actually went back to school for like a year. I thought, okay, maybe I should just like learn a bunch of stuff and figure out what I wanted to do after. So after that year, I was sort of looking at the crypto space again and thinking where to work, what to build. And one of the interesting opportunities that came up was I think the most interesting thing in the crypto space back then was proof of stake networks. So the only proof of stake network that was live at that point was Tezos, and there were like 10 more really hot proof of stake chains that were like slated to launch over the next year. So everyone was trying to build all these like interesting, like income products based on like staking yields. There were like some conversation about liquid staking, all sorts of stuff. So I think that was like the cutting edge of crypto in 2019. So I met a bunch of people at Coinbase who were sort of starting to work on staking stuff within the company. And basically they decided to hire me to work on staking stuff. So I thought that was really interesting. My main project while I was there for the first like 6 months was to work on like Cosmos staking. So running the validators, like writing like the code to figure out how we can do like how we can get our retail customers to stake like really easily, how we can do all this like inventory management where Cosmos staking has like an unbonding window, so we need to manage like the inventory of staked and unstaked assets. So yeah, I think I spent the better part of 6 to 12 months working on that system. And I haven't checked in a while, but I think when we launched it, Coinbase was probably like top 10 biggest stakers on Cosmos. So yeah, I think that was probably like my flagship project at Coinbase.
Yeah, that's really interesting. I see a lot of similarities between sort of the DOV, sort of the yield component to the staking yield component. Now, did you go from Coinbase directly to co-founding Ribbon? And if so, why build on Ethereum as opposed to Cosmos or Tezos or another chain?
Yeah, so I think I was working on like staking stuff for a while, and then I worked on a bunch of other stuff. And this was sort of like at the same time that DeFi summer happened. I was obviously participating in a lot of stuff. I was trying to do like a bunch of these like MAV strategies, but when MAV wasn't even a term yet. So my roommate and I, who's like my co-founder now, we used to run like liquidators on DYDX and all these other like DeFi protocols. But yeah, I think the competition in the MEV space was getting like really insane. We were basically not making any more money, and we were figuring out, okay, what should we build in the DeFi space? And I think one of the ideas that we thought was very compelling is like, at that point, all of the DeFi protocols or yield products in DeFi were sort of fueled by this crazy token incentive scheme. Like all of it really felt like a Ponzi, especially the ones which had like crazy names. And we were sort of figuring out, okay, how do we build like a good yield product that isn't just like lending, that also doesn't require like shitcoin printing, basically. And we were looking around the space. I think we also looked at a bunch of these like Chinese exchanges, like Binance, even like Matrixport, a bunch of these smaller brokers. They were sort of creating these like what they call like dual currency products, which are really just like call selling products. But they sort of phrase them as, okay, this is like a yield product that if you're willing to sell ETH at this level, you can get paid for it now. We thought that concept was very interesting. So I think we started like playing around in the option space and figuring out, okay, how do we take that, bring it to DeFi? Those kinds of products were generally like only being used by large miners and so on. So we thought, okay, if I need like $1 million to use that product, like I'm never going to be able to use it. What if I wanted to do this at a smaller scale? So yeah, we were sort of thinking along those lines, and I think we came up with this idea of like, what if we created a vault product that's very similar to like Yearn or any of these other like DeFi vault products, but instead of doing some sort of yield farm, we actually just like sell calls. So I think that was a cool idea, and we just played around with a bunch of parameters to figure out, okay, how long are people willing to collateralize these options for? What are like the DeFi users' time horizon for these types of trades? And we came up with this structure that sort of we stuck with today, and everyone else seems to converge on as well.
Yeah, that's very interesting. And kind of going back here, you made a really interesting point. Like, we had this kind of yield farming craze where people would become LPs and they're basically being rewarded into protocol tokens. But it's not like a very sustainable model. And vol selling is a way to generate yield in a way that it's never going to go away. There's always going to be vol, and you can always sell derivatives, and it's a very common strategy. So that's pretty cool. And you guys were able to kind of take that concept and put it on chain so people could trade it or do that with a smaller size and in a sort of a self-custodied way. We don't have to go to like a CeFi exchange. That's really interesting. And then one quick thing. So you guys actually did do a token airdrop, and I remember you guys gave it to people who traded DeFi options. I was a Hedrick trader at the time, so I was eligible for the ribbon airdrop. So I was very happy about that. How did you guys come up with sort of that airdrop concept, and what's the idea behind the token and the tokenomics, and then also how did you guys decide to like give it to what protocols like Hedrick or another protocol, so on and so forth?
Yeah, so I think basically zooming out a bit, like we came up with this what we call now like a DOV model. Basically, it's just like a perpetual call selling or put selling strategy, and we felt like the early users who will really understand this stuff are people who understand what options are. And the people who understand what options are, who are also in the DeFi or crypto space, that's not a big overlap. So those people have probably traded on some of these like options protocols. So we thought the best way to get their attention, the best way to get them using our product is to just give them free tokens. So yeah, I think we just narrowed down the list of anyone who has really traded in one of these platforms. Let's give them some ribbon tokens and get them to start using our product. So I think that was like a very good growth hack. We probably got a bunch of users from those acquisition methods. But really, I think it was like the community of people, like our Discord from day one was very like options focused. So I think just catering to more options people made the community strong versus some of these, like, I mean, if you've seen some of these later projects, it's just people who come in and just like, when airdrop, when token, when TGs, it's really just spam. So yeah, I think we were quite unique of a project, and we had a strong options community, which is why people just felt compelled to be in the community.
Yeah, and actually that token right at the airdrop had a really strong demand for it. I remember the market cap was something like $4 billion or something like that. I mean, were you surprised? Were you like, oh my God, this is amazing? Or what were your thoughts?
Yeah, I mean, it was crazy. I think maybe lucky or unlucky in that sense, because I think in hindsight, it's like it's a great start if we can start off at like $4 billion in market cap or fully diluted market cap. But also, like, we obviously know this is not real, and we obviously know like there are going to be buyers at this price, and those people are going to lose a lot of money. So I think I was very cautious at those times, and it just didn't really make sense. But I mean, some of these things you can't really time the market. If a bull run coincides with your token launch, like that's sort of what's going to happen by default. So I think the token price has come down a lot. The market cap has come down a lot with the whole crypto market, but it feels like a much more comfortable base now that we can grow into versus starting off at like $5 billion.
Yeah, that
which
makes
is like
sense.
absolutely insane.
That makes a lot of sense. And I mean, you guys are constantly innovating and pioneering sort of this DOV space. So, you started with the covered call. When did you guys go into the cash secured put? And then I know some other DOV competitors are starting to explore like alternative strategies, like maybe like a basis trade type of DOV. Have you guys thought about kind of expanding beyond the cash secured put and the covered call?
Yeah, so the covered call was like our bread and butter for a while. I think the main reason for that is uh, if you're like a big ETH holder on chain, there are not many places to park your ETH to earn high yield. So, for example, if you look at lending markets, the rates for borrowing ETH is extremely low. It's like sub 20 bits usually. Now it might be a bit higher because of the merge, like airdrop stuff, but historically it's like 10 bits or 20 bits. Same for Bitcoin. So no one really wants to borrow ETH or Bitcoin on chain. Everyone wants to borrow dollars. So naturally, I think that prices like ETH yield, the natural ETH yield on chain at a pretty low point. So I think for those users, if they're willing to take some risk, if they're willing to sell some potential upside against their asset, they can get something in a range of 50 bips a week versus like 10 bips a year sticking in a compound. So I think some users who are maybe more active, more interested in timing the market, those are like the main power users of Ribbon for sure. So I think that was like the core idea behind the product and the core reason why people use Ribbon. And I think maybe like 3 months later, people started becoming like crazy bullish on ETH. They were like, okay, I'm a little bit worried to sell calls. Like, can I just sell puts instead? Because I think ETH is going to double in the next like 6 months. So we thought, okay, this is like quite a nice complement to what we currently have. We launched like these cash secure puts on ETH, and like that really became like our biggest vault in like 6 months. I think in Q3 or Q4 of last year, sort of ETH was just going up, so people were taking on more and more risk, and they had very high conviction in selling puts. So I would say for anyone who wanted to sell puts in size on chain, like this was really the only place to do it. You couldn't like do it yourself on like Open or any of these other protocols. It just didn't have the liquidity that was necessary. So at the peak, I think our put selling vault had like $150 million of USDC. So as you can imagine, that vault itself sold a fuck ton of like short dated ETH puts into the market, which was like pretty crazy to see. But I mean, I think once there are these like massive drawdowns, people are like much more averse to just like blindly following a covered call or put selling strategy. And I think currently people are more active in how they manage their assets on the platform. They think more carefully about, okay, when do I want to pause and resume the strategy? When do I actually want to do these vol strategies? Yeah, that's much more the case today. And I think your second question was about like, are we going to explore new types of strategies? I think our philosophy is like, we don't really want to go down what I call like the vault treadmill. So there are all these like projects who create like 20 different vaults or like 50 different vaults, which have like so many different types of strategies, so many different types of assets. I think realistically, even though like that creates more choice for users, I think it just sort of takes away the product experience. Like at that point, what are you actually known for? You're just known for building a bunch of random DeFi strategies, a bunch of random vaults. So I think we were very explicitly like, let's not churn out 20 different vaults. Let's just focus on like the core majors that we are good at. Let's not try and overcomplicate things and stick to sort of our bread and butter, which is call selling and put selling on the majors. So yeah, I think that's been our philosophy, and that's sort of why we're sticking to these types of strategies only.
Yeah, that's really interesting. And you actually made a point I hadn't thought about before. So like, if the lending rate for on-chain ETH is like 30 basis points per year, while the yield on the covered call is like super interesting, but then you could do the cash and carry trade on say Deribit, and I've seen it really high, but let's say it's like 8 or 9% or whatever. Well, sticking my USDC or whatever stablecoin into the put selling vault might be less interesting because I can already get like a pretty good yield just from the delta neutral cash and carry. I hadn't thought about that. I got to think about that some more, but that's a really interesting point. I'm wondering, can you take us through sort of the process of sort of a DOV auction from Ribbon's perspective, and then maybe touch on, we've had a lot of craziness with Luna meltdown and all that stuff. Did that affect your guys' auctions?
Yeah, so maybe just like zooming out a little bit about like how do the internals of a DOV work, I think is quite an interesting process that maybe many people don't really care about, but hopefully your audience like really cares about this kind of stuff. So historically, maybe let me talk about like V1, which is how we did it initially. It was like super primitive. We would have these like, it was very manual. Honestly, it wasn't very decentralized. We would have basically users stick their ETH into our vault, and we sell, let's say 10,000 calls a week. And we would like on the back end of that, we would find buyers. We would hit up every desk on Telegram and ask them, hey, can you give us a price for like 10,000 ETH calls? And whoever gives us the best price, we take it and we do the swap on chain. So for example, QCP or Genesis or one of these guys, they give us the best price. We tell them, okay, you guys won this round. We whitelist them for that round, and they're allowed to like OTC swap against the vault using AirSwap. So that was how it was done in V1. I would say initially our pricing wasn't very good because I think we didn't have a large set of people competing in these pseudo auctions. Mm-hmm. So if you had like 3 people competing in these things and they all knew that they were competing in these things, like they would all show a bad price. So we didn't really understand that point, and there were not many folks who understood what like these DOVs were. So we didn't really have a choice. But I think very quickly in Q3 and Q4, like somehow every big trading firm started understanding this stuff. Everyone wanted to get in on buying these like large calls and puts in size. So bringing on more competition on the auction process has like magically solved the pricing issue. I think sort of if you try to reason about it simply, like no matter what auction process you use, like whether it's like a simple one or like a really complicated Dutch auction or something, if you have too few participants, you always get like a shit price. Mm-hmm. So having like a large set of participants is really like the number one issue, and then you can sort of optimize again for the game theory. So yeah, our main goal in the second half of last year is like, let's bring on as many trading firms as possible to participate in these auctions. And a key part of that design was, for us, V2, one key innovation that we did there was anyone could participate in these auctions on chain. So we thought like, in our existing model, we only know like 5 trading firms, only those 5 guys are competing. But if we open it up to the world, there might be a random anon call buyer. He can like bite off 10% of the size, and sort of if you aggregate all this demand from random people across the world, you can actually get a better price. So yeah, our V2 system was sort of like focused around this concept of open auction. So we use this on-chain auction mechanism called Gnosis Options, which is basically Gnosis Options aggregates bids from all participants who want to participate in this auction, and it settles at the lowest possible price where the supply meets the demand. So basically, there's no there's no front running. You can't like submit a bid for one bid higher than someone else at the last second. It sort of mitigates all this MEV issues because everyone settles at the same price. And yeah, so it was it was quite a good system for the last 8 months. I think it worked pretty well. But obviously, I think one of the drawbacks of that system is, as I mentioned, it settles at the minimum point and like the lowest price where supply meets demand. So even though we managed to get like a large group of auction participants, I think we got 30-40 people bidding on the ETH calls these days, it would always settle at like a suboptimal price. So that was when we started thinking about, okay, we have a large group of participants, let's like try and optimize the actual auction mechanism. We think that's like the bottleneck now for execution. So we spoke to Anand from Paradigm. We spoke to a bunch of people about these kinds of auctions, and we sort of figured out that instead of settling at the min price where supply meets demand, these things should settle more like a order book where it's through like the best price and then it sort of steps down over time. So that was like the idea that we had, but I think it was very difficult to implement this kind of thing on chain. There were a bunch of like complications around like reinventing a new auction mechanism, and I think we spoke to Anand, and he basically on Paradigm itself, they do auctions 24/7, so they know this stuff very well. So he advised us with like a bunch of sort of auction design that he thinks works very well in his system, and we sort of collaborated and we came up with this like DeFi Paradigm system where we could use Paradigm instead for how the price discovery happens, but it still settles on chain, which is sort of like a V2.5 of our auction mechanism, and it's like our current state today. So as of a few weeks ago, we fully migrated all our vaults to trade on Paradigm versus doing this Gnosis option.
Wow, that's really interesting. So does that mean that anyone who is a trader on Paradigm can go ahead and participate in a ribbon auction? And is there like a minimum size to participate? Because I know you were mentioning in V2, anyone with any size could sort of participate and be part of the bidding sort of order book. Is that still the case for Paradigm?
Yeah, so we initially experimented with a bunch of different auction design as well. And I think, interestingly, we think that if you have sort of any size bids from anyone in the world, you actually get a worse price, because large players like Genesis, like QCP, if sort of there are 10 different people who win the auctions, for example, if all of them win like sort of 1/10 of the size, it's possible that they all get into a race to dump it on the market first. So it's actually like negative. It's like pretty bad for everyone. Like, or some of these bigger players, they may not want to show a good price, because if I know I'm only going to get 1/10 of the size and all these guys are going to just dump it on me, I'm not going to show a good size. So I think counterintuitively, some big players are actually willing to pay more if they can get a larger size. So that was like the insight that we figured out, and basically the solution to that was, let's make these auctions like all or nothing. But I think at this point, some of these auctions are like too big, so all or nothing means like only 2 players can participate, which was bad. So we decided, what if we could break down, let's say we have 10,000 BTC calls to sell, what if we could break it down to 4 different chunks and make each of these four different chunks like an all or nothing option. So we that's like the current model that we are at, and we think it actually works very well, where it solves a lot of the interesting game theory decisions around who gets to win, how many times we can rerun these options, and yeah, I think that's our current state. But I mean, I think if we see evidence of like things getting gamed or someone like trying to take advantage of this system, we can easily change it again. So yeah, I think another big advantage of us moving to Paradigm was we can basically change up the auction mechanism like super easily, right? We don't need to rewrite a new Solidity contract with a new auction mechanism. Like Paradigm by default has a bunch of systems already. So yeah, we thought that was like by far the key advantage of using their system.
Yeah, that's fascinating. There's so much like kind of game theory stuff that goes into this that I've never really thought about. So with the paradigm system, does it basically uh, like the price is figured out on their platform, but then it's just like settled on chain? Is that
Right.
that's the process? Okay, cool. And one of the things that we often notice in like options markets is like when the markets get volatile, the market gets really thin, and then the bid
Yep.
and the ask become super wide. Now,
Yep.
do you see that same sort of process with like the recent market volatility in the sense that like are there less participants in DOVs now just because the market's volatile and therefore the market's sort of thinner, so to speak?
Yeah, I think during like the 3AC Luna stuff, over that 1 month period, we definitely did see fewer bids across the board. That's really just a function of some market makers or trading firms. They just don't want to buy any vol. They just don't want to trade at all.
Mm.
So they're not going to show you a bid because they don't want to hedge. I think they feel like it's a wiser decision to just sit it out. But I think that has sort of corrected itself a bit. The current situation, it feels very much like normal, back to normal. The auctions get a lot of demand. I think all the trading firms have sort of turned their systems back on. Like everyone's sort of back in business. But yeah, I think it was just like really crazy to see that, on the week that Luna collapsed or like the week before Luna collapsed, like we were finding it difficult for people to buy puts, where like that was like the most profitable trade like you could have made that year.
Right.
There were like so few bids on it. It sort of like was a bit crazy. But I think it's really just a function of market makers just want to sit it out when they see high volatility sometimes. So, and these guys are not like directional traders. Like they don't want to gamble on ETH going down. So I think that makes sense.
Cool. And now, one of the things that people are pretty excited about is that Ribbon is going to start, or maybe you guys already did start the doing stuff on Solana. So, are you guys planning to go on to more chains besides Ethereum, L2s, and Solana, or what are you guys thinking there?
Yeah, so in January of this year, in Q1 of this year, I think we decided, okay, the L1 trade is really hot. Every L1 protocol was trading at crazy valuation, and there was just like a ton of demand for generating yield on the majors, which are like not even BTC ETH, but like Sol, Avax, Luna, BNB, basically all the major layer one tokens. So we thought, okay, let's like take advantage of this and let's try and very quickly deploy like DOVs to the major ecosystems and create like a covered call product for those majors. So we started with Avax, which like got crazy traction, like organically. I think in like less than a month, we got like 30 mil of Avax there. Like the whole Avax team was like retweeting this stuff. Like it was really
Nice.
going crazy. And we only did like one tweet about it. So we thought, okay, this really works. And we decided, okay, let's do Solana next. But obviously, as you know, Solana is not EVM. It'll take a long time to sort of spin it up from scratch. So we partnered with Zeta, which you guys have had on the podcast before. They have this Flex product, which is really like it's just like a generic options protocol on Solana. And they helped us write the code to take that Flex and put it into a vault structure, which was very similar to how our DOVs worked. And we sort of slap on our branding, our front end, our users. So that was like a very interesting like joint venture, I would say. It also went pretty well. I think we got a few $1 million of Sol very quickly. But I think since then, obviously this like layer one trade has come down a lot. Sol has come down from like $250 to like $30. Similar for Avax, and there's just a lot less interest on these alternate layer ones in their DeFi ecosystems overall. So we have seen like quite a big decline in sort of assets in these different chains. But I think for now, like the stuff that we are doing on ETH feels like it's still very strong. It still feels like our core user base is still here, and they're still using like our ETH and Bitcoin covered calls. and put selling strategies. So we pivoted a little bit away from like deploying on 10 new chains, and we just focused on ETH, Avax, Solana. Those are like our three major ones right now. And we are probably not going to go down like the crazy, like let's deploy on every single chain anymore, unless it sort of makes sense again. But yeah, I would say 90% of our TVL now comes from ETH. So from the ETH products. So I think that has really been like the ecosystem that has found like the most product market fit for us, and that's like the ecosystem we're investing in the most.
Cool. And so like what's the future of Ribbon? Like maybe, if everything went perfectly as you hope as of today, like where do you see Ribbon going kind of big picture?
Yeah, so I think one sort of rabbit hole that we're exploring now is how do we sort of evolve from like DOVs to a more general purpose or like more types of structured products. So I think if you look at some of these larger folks like Amber who sell these types of products, they don't just have like covered calls and put selling, right?
Mm-hmm.
They have all sorts of different things for different types of clients. For example, they have maybe yield products like lending yield, or they have like principal protected products that combines like lending plus options in some way. So yeah, they have like a whole suite of different things, and we are sort of now in the process of figuring out, okay, how do we bring all those things on chain? Like how do we go from just DOVs to lending as well, to different types of like combination of options plus lending. And we just launched Ribbon Earn, which is like our first venture into this space like a week ago. And basically how this works is um, instead of just selling puts, which in a market, if the market turns, you can lose like a good chunk of money. What if we could just take? What if you could just like lend your assets and take that interest and like buy options with like your interest? And
Oh,
we
interesting.
think that's like a very interesting proposition, because if you just like lend out your assets, you get like a fixed payout. Like maybe let's say you get like a fixed 5% a year by lending your assets. It doesn't change no matter how the market moves. But I mean, if you are like leaning bullish, but you don't want to like gamble on upside, what if you could like take your interest and like buy calls with it? And if you sort of still are able to express your market view, but you don't have the same risk of losing your principal on trading the wrong thing. So we think there's like a large design space there. I'm sure you have seen all these like brokers selling all sorts of stuff like shark fins and all sorts
Mhm.
of like more principal protected products. So we are exploring that rabbit hole now, and yeah, I think we'll be shipping more of these things in the next few months. Um, so that's one category of stuff that we're building, which is basically more structured product stuff. And we're also doing a bunch of stuff on the on like the pure option side as well, which is still like an alpha leak. So I'll leave that as like a teaser, and I think we'll be announcing more in like a month or two.
Well,
So those are like the two buckets of things that we are exploring right now.
yeah, that's really exciting. And so, let's say some of our listeners are new to Ribbon. What's a good way to follow you guys? Do you guys have a Twitter? Do you guys have a, I mean, obviously you have a website and an app. Like, where do they find your website and all that stuff?
Yeah, so I think the best way to find us is on Twitter, which is just twitter.com/ribbonfinance, or go to ribbon.finance, which is our website. Um, I think you should be able to find all the information you have there. And we also have like links to our Discord and other stuff if you have more questions. So those are the easiest places to find us on the internet.
Cool. And then just a couple quick fun questions here at the end. So, obviously you co-founded this company, you're running it. What do you do for fun outside of work? Do you find time to do anything else?
I realistically I work too much, so not really. But I have been picking up tennis, so that's been like a fun IRL hobby.
Oh, nice. That's awesome. And then lastly, if someone's new to crypto or new to trading or new to options, do you have any books that you recommend or any resources that you thought were really useful that you would pass on to newer people?
Yeah, I think maybe I'll give like more crypto specific advice. I think if you're sort of new to crypto at this point, there's really like so many interesting things that's happening in the world of crypto. So I think you can start exploring the sort of like the pure derivatives projects. So people building like derivative primitives, and also you can look at people who are like building on top of them, like Ribbon. And also there are some of these more like interesting new takes on what like an option is. So if you've seen some of this like Uni V3 as options type stuff, that's also very interesting. So I would say, yeah, if you're trying to look at like what is the cutting edge that in DeFi right now, I would say those are like the three interesting things that are happening: primitives, apps, and like more like reinvention of primitives, I would say.
Yeah, that makes a lot of sense. Well, Julian, thank you so much for coming on the podcast. Really appreciate it. And everyone who tuned in, thanks so much. See you next time.
Cool, thanks.